Morning, Steve. Thanks for having us. Well, I think you've just seen that 2021 has been a fantastic year for the London market, and especially in capital raising for companies. And I think that's been the key. On top of that, it's been the IPO boom that's happened, and we've seen that. I think the big trigger, to answer your question, is that it's got access to capital. I mean, the public market is open, and we've seen that in the past 12, 18 months, that access to good blue chip investors that want to invest in interesting companies, and that's definitely what we've seen over the last 12 months.
Yeah, and I hear you. Historically, I get it, Tony, but my worry is that if the private sector doesn't want it, they put it on the public sector. We've seen this with too many large listings over the years as well, or they've taken it as far as they can, or they've geared it as far as they can. So if the private sector has more money available to it at a higher level, as I say, I'm talking about decacorns there, companies with $10 billion valuations, there's more access to private capital out there than ever before. Why is it a good deal for the public investors, the listed company investors, to get involved in these companies when they've been through the private sector and, I guess, run out of steam there?
Yeah, not all the case have actually gone down that private route, or they've done it as a sort of introduction into it, and then look to go further. I think there's going to be public markets out there that are going to be interested in raising money. And that's definitely an interesting market, and we should that's something that was always going to be there. I think for public markets, what we've actually been seeing is the sort of birth of a sort of new economy type of company that's coming, that's using those public markets, and that's what we've seen. That traditional banks and insurance that have sort of been on the public markets for the traditional value returns. We've seen that change in the last 12 months, where that new economy companies, so companies that have got that growth story, that use in tech. We're seeing that in sort of tech sector. We've seen that in the sort of consumer internet, healthcare. You can see that there's an appetite there for public money to actually invest in these companies. And look, the public markets give you that attraction. I think it gives you that alternative to that private sector, and it's a compelling argument. And even though we might see the headlines of some of these sort of underperforming big companies, there's lots of mid-tier, smaller companies out there that are raising that money that are performing very, very well in public markets.
Tony, there's always two sides to the coin, and when markets are going up, particularly big technology names, and you don't have them on the index, everyone's saying, well, why can't we have some of those growth stocks? What do we need to do to attract the big technology names? Now we have the prospect of rate hikes. If you look at the NASDAQ 100 in the States, there's been a sell-off there. A big tech spec, or spec tech as it's been called, has been sold off aggressively. What does that mean for this year for AIM and for some of those new companies that have been rushing to market?
Yeah, look, I think that there has been a mad rush in 2021, and you've seen that in the amount of money that's been raised. Look, I think in 2022, looking forward, I don't think we replicate what we've seen in the markets in 21, but I still think there's an appetite there. And I think you see that to the back end of the year, when in certain listings, certain companies didn't get away. And the investors were getting more selective in what they choose from. So I think you'll see that trend. I still think there is, we're seeing still that sort of tech. I think there's been that sort of clean tech, fintech. We're seeing companies that have got that pipeline are still interested in public markets. But I think the investor base are going to be selective. And we've seen that in some of our new issues that we did in 21. It wasn't fit for everyone. Investors will see what they want to invest in, and they'll be selective in doing so. But that opportunity, I still think, is the London market still be open, and I still think there'll be opportunities in 22.